Good morning, one and all. Oh, hello, you good?
Morning.
Morning, everybody. It is Tuesday, the 13th of January. It already feels like the year's flying by, and we've only just started, so this does not bode well. You join myself and Mr. Michael Brown for the morning blast. As usual, think of it as fireside rather than fireside. We crack through what's been occurring in markets. We tear apart a topic of conversation. It's usually expletive filled, usual trigger warnings apply, usual caveats apply, nothing to be said is trading or investment advice, yada, yada, yada. How are you, my dear friend?
I'm very well, Ryan. Not too bad at all. Sorry, I just noticed that the Best Professional Trading In-House Analysts Award that we won last year here at Pepperstone had fallen over. So I was just propping that back up again. But I'm all right. Thank you, mate.
I'll tell you what, that was a very long-winded, humble brag. Well, you
didn't see the check we wrote them.
You really took us on a long, winding walk to get to that one. What a journey that was.
Well, speaking of long, winding walks, what a segue, because it was a bit of a weird one for markets yesterday, wasn't it?
It was indeed. Go for it. Take us away.
I mean, I won't sort of recap everything that we spoke about in
Thank
terms
God for that.
of the Fed yesterday, because, well, unless you've been living under a rock for the last 24 hours, you will know that the Department of Justice sent those subpoenas to the Fed last week, and news of that broke on Sunday. Chair Powell rightly being very, very defiant about things. And of course, as the trading week got underway, that put concerns over the erosion of Fed policy independence right at the forefront of market participants' minds. And the reaction to that was really exactly what you would expect. We saw participants broadly trimming exposure to US assets, whether that be in the equity space. The S&P future was down by about 1% at one point during the day, whether that be treasuries, which initially traded softer across a much steeper curve, or whether that be the dollar, which was softer against pretty much all major peers. And of course, the big winner from that was the precious metals complex, with gold rallying north of $4,600 an ounce and silver trading north of $85 an ounce. But what was perhaps most interesting was that as the day went on, these moves kind of fizzled out, and equities actually ended the day in the green. The S&P closed at a record high, which I know I said yesterday that stocks should move past this in short order. I didn't define short order as 16 hours, but there we are. We also saw treasuries end the day pretty much bang on where they started, and the dollar paired probably 2/3 of the declines as well. So the initial kind of panic giving way to slightly more rational heads, I would argue.
So my thinking behind this is basically everyone, obviously panic stations, everyone's fucking clutching the brown paper bag and hyperventilating at first. And then they're like, actually, do you know what? This stinks of just Trump basically just tweeting stuff when he's on the shitter. And all of a sudden it becomes policy, but then immediately we had the pushback. But the interesting thing I thought, and we did comment on this yesterday, was the pushback from all sides of the aisle, well, both sides of the aisle, should I say, not all sides, both sides, all two of them, but both sides of the aisle, and basically made it clear, like Republicans coming in, like Tissot and stuff, and saying, look, well, if you're going to do that, then you're not going to get anyone through the process.
I think you're absolutely right on that one. I mean, if you think about the sort of guardrails that preserve policy independence, one of them is the judiciary. And obviously we were saying this time yesterday that this is pretty blatantly, a sham. You haven't cut rates, so we're going to try and pressure you into doing so, which obviously strengthens Lisa Cook's argument in the Supreme Court, as we mentioned yesterday. And then the second, or one of the other guardrails, of course, is the legislature. And as you rightly say, Ryan, the Senate, both sides of that aisle, coming out and basically saying, you have gone way too far now. It's not just the usual suspects like Elizabeth Warren coming out and saying that. It's many senators on the Republican side. The chair of the House Financial Services Committee, he's Republican, French Hill. He was talking around that as well. Very, very significant pushback from Capitol Hill, which I think led markets to kind of actually be a little bit more reassured. I wouldn't say pushback, but even comments from within the administration trying to, almost distance. Everyone was trying to distance themselves from it. FHFA Director Pulte was saying that he doesn't want to comment on things. Apparently he's been a driving force behind it. Which really annoyed me, by the way. I mean, I hate the bloke if it wasn't obvious already. But, if you're going to do it, at least own it. Don't go on Bloomberg and say, oh, no, nothing to do with me. We all know it was to do with you. It's quite obvious it's to do with you. Just stand up and own what you've done. son, be a man. But we also had NEC Director Hassett, who was saying he wasn't involved in it. I mean, it's going to be bloody awkward if he was, given that he might be succeeding Jay Powell in May or whenever that nomination happens. And then Axios were reporting that Treasury Secretary Bessent was briefing President Trump on Sunday night. His words were, "This probe will create a mess," which, sums it up, to be completely honest with you. And the other thing is that Axios were reporting, according to their sources, is that Bessent now believes that all of this makes it much more likely that Jay Powell will see out his term as a governor until January of 2028, which, again,
complete
I think
backfire.
the Trump administration have massively overplayed their hand here, and all of the unintended consequences, whether it be Powell staying on, making it harder to get rid of Lisa Cook, raising the bar for further interest rate cuts because the Fed won't want to be seen as political. I think that the unintended consequences of this were not necessarily thought through, and it's basically blown up in their face.
Well, exactly that. And we do love a good pushback story on this show. So pleasing to see that. But I'm glad you mentioned Pulte, because obviously those regular listeners will know our absolute disdain for the twat. But the thing is, as soon as someone mentioned that it was probably him that was behind it, immediately you're like, do you know what? This has got his fingerprints, his greasy fingerprints all over it.
Indeed. I'd say one final point I would make on the Fed this morning, just that I found this information out while I was scrolling through Twitter on the train this morning. We mentioned yesterday how basically the entire sell side were essentially united around Powell in saying, this is massive overreach, this is politically motivated, et cetera, et cetera, et cetera. Powell is doing absolutely the right thing. Probably the most vocal, if not the only voice who was pushing back against that was Mohamed El-Erian. And we were saying how that's a little bit weird and how he seems to have gone off his rocker recently. Well, it appears that we have found out why that will be.
I don't know. So go on, do tell.
So let me take you back to 2018.
Hang on. One second. Let me get comfy.
So Jay Powell was, mere months into the job at that point, probably about 18 months into the job. And Stanley Fischer resigned as Fed vice chair. Trump had to pick a new vice chair to join Jay Powell at the Fed. That pick came down to between two people, Richard Clarida and Mohamed El-Erian. Guess who got the job? It was a certain Richard Clarida. Guess who was pushing for Mr. Clarida to get the job? Not only Treasury Secretary Steve Mnuchin, my doppelganger, but also Fed Chair Jerome Powell. So anyone asking, is there a little bit of beef between El-Erian and Powell? Well, yes, I think there probably is, because El-Erian would see that as Powell sort of overlooking him for the job he wanted. And it seems that is probably what's driving this slightly wacky criticism of Jay Powell that we now see coming out of El-Erian every time he speaks.
Powell right in the kisser, eh?
Indeed.
Well, indeed. Good insight, Mr. Brown. Good insight.
I thank Nick Timiraos at the Wall Street Journal for that. But I thought that was a little bit spicy. Just a couple of other bits and bobs before we get on to our sort of debating points this morning. Sticking with the Fed.
You could say a mass debate.
Oh, God. Sticking with the Fed very briefly, President Trump is going to interview BlackRock's Rick Rieder for Fed chair. That interview is to take place on Thursday. Quite why Rick Rieder would now want the job, given everything that's going on, is actually beyond me, but never mind. That will be the fourth and final interview in the race to replace Chair Powell, obviously in May, providing the Senate are confirming that. You would then expect, after that, it's a question of any day the nomination could come, although do bear in mind that Trump is due to travel to Davos early next week, so you could potentially be looking at after that Davos trip before a nomination is sent to the Senate. Of course, Hassett still the front runner, followed closely by Kevin Warsh. And just a couple of other things. Firstly, in terms of Treasury supply, we had a couple of decent auctions yesterday, 3 and 10-year sales, both stopping through the when issued. Obviously, the pairing of early losses helping with that, and that comes ahead of a 30-year sale later on today. And lastly, for the time being, in the AI space, Apple, they have reached a tie-up with Alphabet, aka Google. They are going to use Gemini to power an AI version of Siri, which is due to be delivered in 2026. This is according to CNBC. Of course,
just on this, sorry to interrupt. I actually did put out one of our new little flash things on it, our little funny.
There we go.
flash quick cards or whatever we're calling them. I still need to come up with working title, obviously, as you can tell.
Very much a working title.
One thing I did notice, I found quite interesting, is they did acknowledge, or insiders have acknowledged, well, two things. One, Apple's own AI team were known internally by other teams as Team Aimless, which I thought was quite interesting, obviously with the A and the I capitalized. I see what they did there. The other thing of note was insiders did say that Claude, or Anthropic's Claude, who happens to be my favorite one, was the better option and far more powerful and far better, but but Gemini was half a billion cheaper.
Yeah, well, that settles the deal then, doesn't it? Just lastly, go and read the cheat sheet.
Working
brief,
title,
whatever the hell we're calling it. But not Apple, Alphabet, Google, they did briefly trade to a $4 trillion market cap for the first time on the back of those reports yesterday. They were up by about 2% on the day. I think that makes them the fourth company to hit that milestone, but I may be wrong on that front.
Fourth or fifth, I think. Yeah, definitely.
Yeah, I mean, at this point, you kind of lose track. I mean, Nvidia are going for 5, aren't they? So,
Well, do you know what? And I was talking to someone the other day about this, harking back to during the floor times. I remember trading during the GFC, the global financial crisis, and I remember hearing on the Squawk, our friends like Harry Daniels and obviously all our friends at News Squawk and stuff be squawking out, numbers such as bailout required of 200 million, or this is someone's in the hole for 300 million. And at the time, we were thinking, fucking hell, these are huge numbers. Now, 300 billion is literally, that crosses through on the Reuters or the Bloomberg terminal. It barely registers that it's a number, like barely registers more than hundreds of thousands these days.
Yeah. No, you're absolutely right. I mean, I actually, very sort of topical, I actually saw that headline as I was jumping on a train yesterday and just kind of looked at it and went, oh, okay.
Yeah.
You just, oh, yeah, fine. They're the latest one to do it.
Yeah, only a couple hundred bar. What's that? What's that? I wouldn't, don't get out of bed for that.
Yeah, I was going to say, if anyone's got some to give away, then I'll happily receive it.
But... Yeah, if someone no longer needs it, just do it. It's just down the back of the sofa. But anyway, good hustle so far. So now, time for a mass debate over the Japanese PM.
Oh, right.
Bukaki. There you go. See that?
Oh, it's all falling apart, isn't it? It's the 13th of Jan, and it's gone.
I've already
evaporated.
I'm asleep till Christmas. But anyway, for those of you unaware of what's going on, so obviously the Japanese PM, I call it Takashi or Takeshi, mainly because of Takeshi's
after the castle.
Yeah, exactly that. But it appears increasingly likely, if not already confirmed by the time you listen to this, that she's going to call a snap election. So the dissolving lower house on the 20th, I think they come back on the 23rd of January, and the rumour is that she's going to call the snap election then, with the election likely to be the 8th or the 15th of February, according to what I'm looking at. She's only been in the job for 4 months. She's Japan's first female prime minister, but she does have a whopping 75% approval rating. And, this is huge kind of political capital for her that could only depreciate really from here. I don't think you're going to get much higher than that. And the coalition that she's in, that she got elected into, is quite fragile. So I think the idea being here that she wins massively, she gets a genuine mandate, and then sticks herself in a better position than she currently is, which kind of makes sense, right?
Yeah, exactly that. And we did touch on this briefly yesterday, because there was reporting on Friday from Yomiuri in the Japanese press around these election rumors. And that, as you say, seems to have picked up in terms of volume and in terms of credibility over the last 24 hours or so. And it is exactly that. Effectively, Takaichi going, I may as well strike while the iron is hot.
Yeah.
I'm probably never going to have an approval rating anywhere near where it is at the moment. I mean, it's basically as good as it's ever going to get. I saw another poll that had youth approval in terms of with under 25. It was at like 90% or something. So, things are basically as good as they're going to get. If you're going to call an election, you may as well do it now rather than wait until the spring, which is when we had previously been thinking. And just in terms of some context, as you rightly said, Ryan, the ruling coalition at the moment is a very fragile one. This would only be a lower house election. So
Yeah.
the LDP don't have a majority in either chamber, but the lower house, particularly in terms of budgetary matters, is much, much more important. They currently have 199 of the 465 seats, and obviously they need 233 in order to get a majority. They would be hoping that a relatively quick election campaign in terms of it being now would mean that they can capitalize on Takaichi's popularity. They would also be hoping that a relatively short campaign, because we're talking about polling day being potentially less than a month from today, would potentially mean that they're kind of catching opposition parties off guard a little bit. They would all have been sat there planning out the year ahead, going, we'll ramp up our election campaigning into the spring. Well, hold on, guys, you've now got to do it in February, which again could provide them with a little bit of an advantage. And obviously this has caused a fairly significant market impact in terms of Japanese assets. JGB's softer across the curve. The yen trading up, or dollar yen, I should say, trading up towards the 159 mark. And the Nikkei is absolutely flying on the back of this. And I think sorry, just to finish this point, I think the rationale or the thinking behind that is, firstly, an LDP majority in the lower house gives you a much greater degree of political stability than Japan currently has. And the second is that if you do get that LDP majority in the lower house, it means that Takaichi does not need to start making concessions in terms of fiscal policies, and she can go much, much bigger in terms of any stimulus that she might want to provide.
I'm glad you mentioned that, because that's exactly what I was going to mention. Like, just to kind of frame who she is in her background. Again, I do keep saying Takashi, but there you go. Better than Tamagotchi, I guess. She is a protege of Shinzo Abe, which is hawkish conservative, very, very pro-fiscal stimulus, which is why yen weaker, stocks up. Pretty much, if we're kind of basing it down like brass tacks kind of thing. She has also, just regarding her potential tension with the Bank of Japan, if all of the country has a lot more power, she has called rate hikes stupid during her campaign, which is something to think about. She's very, very kind of at odds with where the current BOJ is. Well, the BOJ normalization versus her stimulus do not marry up. So we need to work out what's going on there, and how we progress further from here. But I think it's a very interesting one to keep an eye on. Obviously, there's a lot of financial capital tied up in Japan. I think there are people already calling it like Sailonomics. But I think it's an interesting one. But what would I be looking to get long the yen at this point? Definitely not, because I think it could get far worse before it gets better. And I think as well, like we said before, the yen seems to have that, when motion, when trajectory and motion kind of gets carried away, it can start screaming.
Yeah, absolutely. And just lastly on this, well, actually two things. One, in terms of the BOJ, you're absolutely right. Takaichi does not want policy to be any tighter than it absolutely needs to be. I mean, arguably, she wasn't overly happy with that 25 bip hike that they delivered in December, the back end of last year. However, it appears that there's almost I guess you could call it a bit of a gentleman's agreement, or gentle ladies agreement, gentlewoman's agreement, where she's kind of okay with a hike every 6 months. So in terms of the election, does it change the game for the BOJ? Not really, because you probably weren't looking at a hike in Q1 anyway. And money markets don't fully price a 25 basis point hike until September in any case. So there's no real cause for concern on that front. The other thing that every man and his dog is unsurprisingly talking about this morning is, does this raise the risk of any intervention in the yen?
That's exactly what I was going to come on to, so I'm glad you mentioned that.
This is... it's something that does the rounds anytime the yen weakens significantly. I think it's important to just remind everyone that the Ministry of Finance, who made this is not, actually, just to clarify this, intervention is not a decision that is made by the Bank of Japan.
Exactly.
It's a decision that's made by the Ministry of Finance.
Just quickly, because I think it's an important point. So just for listeners when they listen, when listeners are reading, etc., when they see BOJ, and they often see MOF. MOF is what Michael's talking about right now, the Ministry of Finance.
Yeah, absolutely. So to massively simplify the process, what happens is a man in the Ministry of Finance decides,
or
or woman, we're all inclusive on this program, decides, now is the time, today is the day we're going to intervene. They pick up the blower and they ring the trading desk at the Bank of Japan and they say, right, we want you to do X in the market at this time in order to achieve what we want to achieve.
Yeah.
So the Bank of Japan executes orders from the Ministry of Finance. The BOJ are not sat there punting around with the yen. They are simply doing the bidding of the politicians in this instance.
Exactly.
The other thing to remember in terms of intervention is nobody knows exactly the formula or exactly the variables that folk in the Ministry of Finance are looking at.
I mean, there might not be. It might just be someone just decides.
They might just roll some dice. Who knows? We're not privy to that. But the one thing that is relatively clear is that the focus is largely on, firstly, whether any moves that we're seeing in the currency are in line with or detached from fundamental drivers, things like interest rates, fiscal policy expectations, et cetera. And the second sort of determinant that goes into their thinking is the speed of any moves that we're seeing. It's not a case of the Ministry of Finance going, dollar yen has traded to 160, we're going to give it a slap down. It's more a case of dollar yen has rallied, say, 5% in a day and a half. That's now getting disorderly. We need to step in. That's the way that their thinking goes. So I understand why people are kind of jumping on this bandwagon of, the Ministry of Finance are bound to step in any second now. But I would just caution that dollar yen has moved, well, what's that? Over the last day, we've moved about 0.5%. Over the last 5 days, we've moved a big figure and a half. We're not talking about particularly rapid moves at this moment in time, but obviously it's a risk that you do need attention.
Well, yeah, just to add a bit more color on this, Japan, the MOF, BOJ/MOF, they intervened 4 times in 2024 when the yen approached 160. But as Michael said, it's far more about the speed of the movement is what they seem to care about more than the actual price. Now, if we can all just don our tinfoil hats for a second, and I hate this, but it's worth flagging because you might see other people talking about it because a lot of people love a tinfoil hat. If I was the Bank of Japan or if I was the Bank of Japan, right, and Takeshi's Castle is about to kind of come into office. She's been outright calling us wrong in what we're doing, and she's basically mugging us off. She's going to come on and flood the market with stimulus and stuff. Am I going to, bear in mind there could be a snap election at any time. If I intervene in the currency market, I'm doing her a favor, right? If I don't intervene in the currency market and the yen weakens a bit further because of what she's saying, that will reflect in the voters in the polls and, potentially make her kind of become a little bit less hawkish. Well, dovish in her case, but make her become a little bit more dovish. So again, tinfoil hats donned, but potentially there is, in my opinion, very loosely held, there's scope for the Bank of Japan to let this run a little bit more than they otherwise would, just to kind of penalize Takeshi, to kind of say, look, steady on. It's all right doing what you're doing, but remember that it's us that's kind of protecting the currency. And if we decide to stop doing that, you're in the shit.
Yeah, absolutely. I wouldn't disagree with that, to be honest. So yeah, certainly one to keep an eye on. Intervention, I wouldn't say it's my base case, but I'm sure we're going to be talking a hell of a lot about Japan in the next few weeks.
Quite.
Should we do the day ahead?
Yeah, go on. What else is occurring?
Yeah, so in terms of today's data docket, I think there's probably 2 things to keep an eye on. The first, in terms of economic releases, is at 1:30 London time this afternoon, 8:30 on the East Coast, and that is the December US CPI report. Headline prices are seen having risen by 0.3% on a month-on-month basis and by 2.7% on a year-on-year basis. Core inflation, meanwhile, those expectations are identical, 0.3% on the month and 2.7% on the year. Do just bear in mind that there are no prior numbers for the month-on-month data because obviously the October CPI data was just skipped entirely because of the government shutdown. So you didn't have a month-on-month number for November. So we've got kind of nothing to compare it to on that front. Having said that, I think the policy implications of CPI today are going to be incredibly minimal, if there actually are any at all. Of course, money markets have basically priced out any chance of any Fed action in January after the jobs report we had on Friday. The swaps curve's got about a 4% chance of a 25 basis point cut now. The next cut is not fully discounted until July, but in any case, the Fed's reaction function leaning much more heavily right now towards the employment side of the dual mandate as opposed to anything price related. So that further lessens any implications of the data we get today. And also just to bear in mind that today is the start of Q4 earnings season on Wall Street. We hear from the likes of JP Morgan and Delta Airlines before the opening bell. In terms of expectations for earnings season at large, which obviously rumbles on for the next 5 or 6 weeks, and this has come from the very kind people at FactSet. They note that S&P 500 earnings growth is expected at 8.3% on an annual basis in the fourth quarter. That would be the 10th consecutive quarter of year-on-year earnings growth. Revenues, meanwhile, are set to grow by 7.6% on an annual basis, with only the energy sector seeing a year-on-year revenue decline, and that's primarily due to lower crude and energy prices. Just in terms of valuations, I just wanted to mention this, I found this very interesting yesterday. The 12-month forward PE for the S&P 500 is 21.8, which you would say is overvalued, but you don't short a market just because it's overvalued. Otherwise, you'd have sold the S&P in like 2015. However, what I did find interesting, and this came via Cameron Christ at Bloomberg, if you look at each of the 11 sectors, actually, I'm going to ask you this as a question because I don't think you'll have seen the column. So you've got 11 sectors of the market. On a 12-month forward PE basis, what is the only sector that is cheaper in the United States than it is in the rest of the world?
Oh, mate, I haven't got a clue.
Well, the answer surprised me because it's technology.
Do you know what? Because you asked I'm annoyed about myself. Because you asked the question, I thought it's going to be something that I definitely kind of should know better. And I decided to, yeah. So
it was one of those where you kind of read it and then you have to read it again and again and go, oh, that is actually right. So, everyone's saying, oh, Nvidia's expensive or Microsoft's trading rich or whatever. Well, compared to some of the other tech stocks globally, clearly they aren't. But anyway, earnings season gets underway on Wall Street today. The busiest week of earnings season is going to be the week beginning the 26th of Jan. That week, we get 33%, so a third of the S&P 500 in terms of index weighting will be reporting. And that includes some of the mega cap names like Tesla, Meta, Microsoft, and Apple. Just lastly, in terms of going back to today, as I mentioned earlier on, we do have a 30-year Treasury bond auction at 6 o'clock this evening, and speeches today come from the likes of the Fed's Musalem and Barkin, as well as the ECB's Kosher and the BOE Governor Andrew Bailey. But he will be speaking at a closed-door event, so we might not get anything on the wires from that one. But otherwise, that's it from me this morning.
And that's it from me as well. Michael, thank you as always. Hopefully tomorrow we get Clive back with some market updates, which would be nice. Get our Marabuzu fix in. But yeah, until tomorrow, whatever you're doing, stay safe, keep it tight, and we'll see